Hello and welcome to Lipper's Fund Flows Insight Report. I'm Jeff Turnahoy. For the week ended April 2nd, 2014, we saw relatively light to moderate net flows activity across the board. Let's take a look at our four asset classes and see how they fared. Starting off at the top, equity funds had about $2.2 billion in net inflows this week. Taxable bond funds, not far behind, $2.1 billion for them. Municipal debt funds had outflows this week of about $100 million. And finally, money market funds had outflows of approximately $15.7 billion. Well, it was kind of a light week for economic news. We saw some improved data come out about the economy in February, and we're going to be seeing more of the Q1 data shortly. For now, the geopolitical talk has shifted to sanctions against Russia. The U.S. is trying to pressure Vladimir Putin to maybe push back from his formations outside of Ukraine and let the situation calm down a bit more. It probably goes without saying, but worth repeating, that Crimea probably belongs to Russia for now. Let's hope the rest of it stays put. As far as equity investing goes, we saw interesting flows this week as investors chose large cap core over large cap growth. The market was up about 2.6 percentage points this week in our Wednesday to Wednesday flows. Again, with Ukraine, Janet Yellen's backtracking on her 6-month utterance, which I wouldn't blame her for, and interesting news about the economy related to the weather, all having a bit of an influence on investor activity this week. People chose to turn toward equity funds in fairly modest amounts. Again, $2.2 billion this week saw large cap core funds displace large cap growth. Core with about $957 million in net inflows, growth with about $429 million out. So tough to say that they felt truly convinced about anything they heard or read this week, but overall, positive sentiment remains in equity fund investors' minds. We did see some of the more interest rate sensitive sectors sell off, such as utilities and so forth, which isn't unexpected given that interest rates went up a little bit this week. Let's turn our attention now to equity ETFs. Here again, we also saw modest activity on a net basis. Overall, a fairly light change, in other words, where we saw large cap and emerging markets with inflows this week. Conservative and small cap strategies tended to see more outflows. This is also the first week of a new month, so we expected to see some activity from Good Harbor Financial, but we have not yet. At least it's not in the flows data, or if it is, it's well hidden in there. We are looking at data on a net basis after all, so it could just be buried in there somewhere, but we'll wait till next week to confirm that. The next group to take a look at is taxable mutual funds. Again, they had inflows of about $2.1 billion this week. It's slowed down a little bit. Good news for taxable bond fund managers is that we've only had 1 week this year where flows fell below $2 billion. So far, so good for them. Good performance in the market this week for taxable bond funds in general. When it comes to inflows, the strategies that investors preferred were high yield with about $153 million and core plus funds with about $247 million. They didn't seem to care too much for U.S. mortgage funds, mostly through double line total return, with about $185 million in net outflows. Well, let's turn our attention to the other side of ETFs, the fixed income ones. Again, investors were kind of choosy this week about what they wanted, not too much overall activity that would get our attention. We saw the short treasury and EMD products up at the top take in money, while at the bottom of the pile, MBS and Treasury inflation protected securities saw outflows. Again, overall, fairly light activity on a net basis this week. Well, the next group to look at is municipal debt funds. Again, they had about $100 million in outflows this week. This is the second consecutive week of outflows for this group. Performance was still up. I think it's about 47 basis points or so. So I would have expected a few more people to jump into the market, but this does come after 3 consecutive weeks of downside performance. So probably still a few investors concerned about the direction of the muni market. High yield munis were the top gainer this week, about $147 million flowing into their coffers. The situation in Puerto Rico seems to be resolved for the time being. Yields are coming down on Puerto Rico's general obligation bonds, which is keeping a lot of mutual funds in good shape. Final group to look at is money market funds. They had outflows this week of $15.7 billion. We note that retail investors put about $1 billion back into their cash accounts, while institutions found about $17 billion to put to work in other locations. So overall, a moderate outflow activity for money market funds. So that'll do it for this week. Please join us again next week, where we'll take you through the data on ETFs and mutual funds. You can reach us online as well at www.lipperusfundflows.com. Thanks for watching.